All right, good morning. Sorry for the late start. The markets are going crazy. I couldn't keep up. Just kidding. Nothing's going on. Please let me know if you can hear me on YouTube. I would appreciate it. And we'll get started watching paint dry. Thank you, Lois. I'm assuming you can hear me. All right, I'll be back in a minute and a half. Do these disclaimers.
NQ stock sell NQ.
Hey.
181 contracts.
Things are looking up.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital links for educational purposes only and should not be considered as express or implied promise or guarantee that you will prompt trade losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment in both cycles and trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account will respond to achieve prompts or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses on material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results at all, of which can adversely affect actual trading results.
This trade room and this webinars are not intended to verify trades or to give specific trade recommendations. Analysis of my share trades and potential trades may take place based on my personal analysis. The goal of this room is to teach trades on identify specific trades, trade potential themselves without the money decision is yours. Trading is extremely risky. If you decide to follow my personal trades, you assume your own risk and can potentially lose your entire account and even more. I'm not always profitable and I have 14 drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to have its own values and ATR values and help me pinpoint exact prices for my trades. You can see when I enter its own prices into the master spreadsheet as well as the prices of the trades whether you want to go long or short. You have the ability to copy the spreadsheet and enter your own values and use mine to confirm its own prices and to vary the zones correctly yourself. The spreadsheet is not telling you which direction trade is, and it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade.
Alrighty, good morning again. So something just fired off on NASDAQ. I'm quite surprised. Thought we might go through this whole webinar without an equity setup, but on cue, Mr. NASDAQ comes through. Alright, so these were sell stop runs that just fired off here, 181. So again, these sweeps, and that's what these black, I always get, what are the black balls? What are the black bubbles? These are sweeps, right? So sweeps get first right to the order book, then the stop runs fire off, so you really don't know where the stop runs are in this sweep pattern. So you got to assume they started where the sweeps started, because they could have been anywhere in here, right? Because they get second right to the order book. But yes, sweeps came in here, but this price already traded up here, and it didn't trigger the stops at the time, right? So it couldn't have been this price. Yeah, someone could drop in stops on a fly, but that rarely happens. They're usually just sitting in here. So I would start this stop run right there. And this is the handy dandy drawing tool that a member of my trade room developed. We are still in beta testing. We're probably gonna have beta testing until the start of the new year, and then it'll be available for subscription. I will put this information in here where you can get this. You gotta go to Discord and request access to it. It's a lifesaver, life changer. I don't sit here and use this, archaic drawing tool anymore where you gotta get into edit mode, back out of it, draw your zones, back out of it, and things like that. So it draws it automatically. You do have to adjust it, but it's pretty accurate on its own in its own right. And then you can scroll these prices up and down. It's very helpful. All right, so this already looks like this was possibly an ATR. ATR is only 10. Yesterday it was like 7. It's the lowest I've ever seen in a NASDAQ. We'll go over what I'm talking about here. So I'm going to plug these zones in the spreadsheet. This is also available to you guys. It's free to my trade room. If you can't make it in the trade room, you can get access to this via subscription. I'll give you access to that sheet here in a second. So top of that zone is 17.
Soy meal iceberg sells in 150 contracts.
Might be trading some soy meal today since nothing's really going on. I am long wheat currently and long bonds. We'll go over those trades here. So you put in the zone price, so the spreadsheet works, and then you plug in your current ATR, average true range. It's a 5-minute Wilder's ATR. I'm just getting it straight from Thinkorswim. You can get it on Sierra Chart. Other platforms have it. You can see that means the market's just basically rotating 10.5 points, a little under 10.5 points every 5 minutes, which is very, very, very low for NASDAQ and Q. And then I have specific rules on how I judge these volume events, which are the core of my trading, the best edge I've ever seen in futures trading in my 25 years of trading. I have specific rules on how the market reacts to these areas to determine whether this is a bullish or bearish setup. So ideally, you want to have important areas that you trade on, that you look at, and then when you get your volume event there, which is what's happening right now, real time, that's the edge, right? And then if you understand how to trade these and follow your rules, that's the edge, and that's the only edge that you need as a trader, as far as I'm concerned. That's the only edge I need. So I have specific prices to validate whether these are bullish or bearish, if it can get an ATR above or below the zone. So to make this a short setup, it needed to touch 0125. Got close, did not touch that yet, and it obviously didn't get above here in ATR either. So still don't know what this setup is as far as just basic bullish or bearish. Next step is to see where we're at, bigger picture, see, like I was talking about a little bit ago, about the important areas. So this is an ISI zone, an inflection zone. It's not a major zone, but it's important, especially what happens here. Get my jar guy going. So you can see here, yesterday, just tight, gross trade, did really nothing, built balance. So this tried to break out yesterday. Now we're back in the zone. So if this moves out of this volume event, I would take this trade aggressively long. So I can put that in right now. This is important just from the last few days. Obviously, this is a multi-day balance area. If this does this and then violates this high volume node of this balance area, which is the high volume node, is just where the most trade occurred in a balance area, right? These are just traders that are placing bets. If it breaks that, that would be a failed breakout of that structure, and those are some of the best trades out there, right? So markets many, many times, especially equities and crude and gold, they'll do the juke move. It'll look like they're breaking out. All the traders chase it, then it comes back, retests the top of the balance area, then it goes, the high volume node, then it goes. So right now, this is still looking bullish overall. If it violates that high volume node, then my thesis will change a little bit on, I'm willing to take shorts, bigger shorts, the other way. So I'm a day trader, trade both ways, long or short. We're just looking at this setup, whether I'm going to trade it long or short, depending on different variables. But if my thesis lines up, like right now, I still have a bullish thesis. If this moves out of here, I can trade longer aggressively to the long side because my thesis is bullish based on that, right? If this breaks its high volume node, then I can trade bigger to the short side. And that's how I do it, right? I'll trade both ways, but if I get things lined up in the direction of my thesis, then I'll trade bigger. All right, so this has not done anything on here. I'm going to put my ISI trades. Uh-oh, I think I just stepped out of something. Is that wheat? Where did I just fell there? Why don't I have my full position on in bonds? Hold on one second, guys. That's strange. I don't know why that didn't fire off. Why did my... Hold on one second here. Not sure why I just stepped out of my wheat trade. Alright, so we'll go over the wheat stuff here in a second. But if this moves, unless this shows me this is a bearish setup, which we said the price is 0125, and you want to continuously update your ATR too until it touches its price. As long as it doesn't touch that price to make this a bearish setup, I'm going to go long aggressively out of here. If it doesn't touch this 0125, so you can see all these prices on this spreadsheet. So to validate the short, it needs to touch that. To invalidate a potential long, where I'm going to go long at that price, you can see the invalidation price is the same as the validation price for the short. So if this touches 0125, then this trade is off the table for me. But until that happens, I'm going to set this up, and This is an Izzy trade. I showed you the Izzy zone, and these are the strategies. Again, these are my important areas that I use, that I deem important. Then I wait for volume events in these areas. So this would be an Izzy trade, and most of the time it's an aggressive trade, meaning a move into the zone as a fade trade. So we just went over this, but market closed up here, back in the zone, volume event. If it moves back out of there, I'm getting long aggressively. There's other trades where I'll wait for a full ATR, move away, a retest, a failure, and then or confirm. We call it ATR retest confirm, and then I'll get in. We'll go over those too. I'm sure there'll be a few of those. So anyway, as of right now, I'm going to go long here at 27. Again, make sure this is accurate. It's 10.21 now. So see, it makes a difference. So now it's 26.75. I'll go long, and I could put on 10 MNQ. You can put on one full one. But, you know, I always say if you're undercapitalized or you're trading micros are the way to trade, because then you don't have to, it's not all or nothing as far as getting out of the trade. Like if I put 10 on, I can get out of 3 at an important area. I can put on another 3rd at an important area. So highly recommend the micros if you, if you can trade multiple regular NQ contracts, then that's fine. But if you're, I wouldn't just put on one NQ is what I'm saying. All right, let me set this up so I don't miss this trade. And I'm going to trade this bigger. Well, let's see. So, I come up with thesis according to different things, right? So algo guy, this is an exponential moving average ribbon. Blue is the short term, red is the long term. This is bullish as of right now. If this pulls across, then you're going to get these algos that jump on the moving average crosses. But right now, this is still at the moment bullish. We already talked about this is still bullish because it's not violated this high volume node of this balance area. And then the other things I look at to come up with a thesis are market profile composites and Ludwig levels. We call them lugs in the room. Very, very powerful. So I'm not seeing anything in the lugs as far as, a lot of times when you build new lugs, we'll go over this, but there's nothing right now here. It didn't get quite up to the red. It is above yellow, so you would still assume that it's going to tag red. So that's semi-bullish. So we talk about this all the time in our trade room too. So everything's not always going to be lined up one way. So you have a scale in your mind, and we already talked about a couple of the bullish things. Algo guy's bullish. That would go on the bullish side of the scale, right? Let's just label this so people. My awesome handwriting here. And we know we're breaking out of that balance, just coming back to that balance. That's bullish. On the bearish side, not really seeing much on the bearish side. So, say algo guy crosses, and then you would put that X over here on this side of the scale. But so the days that you have everything lined up, we'll look at some other things here too. Let's just look real quick to see what we can get on this scale on both sides. When you get things lined up all in one direction, that's when you can trade bigger, right? So let's see here. This is the tick. Not really telling me much here. It's just hovering around 0. Hasn't made extremes either way. Extremes would be plus 1,000, minus 1,000. It's just the universe of stocks and the NASDAQ, and then this is the NYSE. You can, get some information from this as well. If this starts tagging plus 1,000 or minus 1,000, bigger moves, they're selling. A majority of the stocks are getting hit or bought. So you always want to keep an eye on that. Everything you want to watch is ADD. This is the advanced decline. It's just sitting nowhere, neutral. Where you want to, pay attention to those days when it gets up to plus 2,000 or minus 2,000. That would be a trend up or trend down type of day, right? Those instances, like if you're at like 2,300, you don't want to be taking shorts on days like that. Yeah, you'll get pullbacks, but they'll be very, very shallow, and then you get the move. You get a shallow pullback, and then you get a bigger move up. So those days you want to try to avoid those trades. Where am I phone? All right, I just stopped out of my wheat trade, so I'll go over that loser here quickly, show you what I was doing with that. I am still long bonds. We'll go over this. A lot of activity here pre-market. You had a couple double whammies. So this is my these are one of my 6 distinct setups that I look for in the stop iceberg indicator, the subchart. We have names for each one. Again, that's part of my trading course too. So you can learn those events, and then you look for these events in important areas like we talked about. So anyway, this came down. There was a big stop run here, almost 1,000 stops. You can see it started to draw that zone on its own, and then buy ice came in. So this is what we call a double whammy, one of my 6 setups, right? So double whammy is the dumb money puke. Usually the pukes are retail traders puking out into the waiting hands of buy ice, right? The big money. So that's why we call it a double whammy. So inherently this should be a bullish setup on its own, right? Just because the stop runs aren't usually initiative selling. It's guys puking, right? For the most part. Yeah, you could stop into orders, but the most of the time it's guys just puking out of position. So you have that information with the stop runs, and then you know big money is secretly hidden with their hidden icebergs, because icebergs are hidden until they're triggered, until they're traded into. Then you have the two bits of information here, right? 2 parts of information. You know that stop run's not aggressive or initiative selling, and then you know that the big money is buying here. So that's good information to have. Again, inherently that is a bullish setup. If this breaks, then that's even more information, like this should have held, watch out to the downside. But as of right now, it's working the way it should work, right? So you had that, and then a little bit ago, you had another double whammy, a little lower. I just actually plugged this in the spreadsheet as one zone, and I was willing to trade, off of these prices, my top of my zone. Don't pay attention to these. These are off on the drawing tool, but it was like 125.13 down to 125.07. And I had an order working up here at 18, and then the half hour plus later, actually almost 50 minutes later, this came in by itself. So I kind of skirted the rules a little bit, where I'm going to trade off of that on its own, where I don't have to. My original order was here, and I'm like, because this is an Izzy zone 2, we'll go over that here in a second. I'm like, okay, I'll just get in aggressively off of this event because it was so long after that. You could just say I'm making this all one event or one area. That's fine too. You're just getting in at, that's a wider zone. So I kind of got a little greedy here and said I'm going to trade just off of that event as far as my entry, or else my entry would have been up here. Instead I got in at 11, right? So you'll see that here on the spreadsheet. And that was this entry right here. So it was originally 125.18. I was able to move it down to 125.11 because of that new event, right? And what I was looking at to get long there aggressively, so that was the first move out of there, was a move back into this Izzy zone, aka flexion zone. So the further these things go back, the more important they are of things that have happened in the past. I'll keep them there. Things keep occurring there, right? So this came down, and I still have that there. If a market trades through areas, in any kind of area you're looking at, a bunch of times, well, it's not relevant anymore, right? So if this were to do this and this, then I would just cancel out that zone, and it's not important anymore. Right now, I'm betting it's still important, right? And this market's obviously bullish. Broke out of this balance area, right? Multi-day balance, there's your breakout. It didn't even get back to this, and it looks like that is going to hopefully launch from there. But that's why I put on that trade, and I put it on aggressively. So I have an important area, and I got my volume event, multiple events in that important area. That's the trigger for my trades. So I am long at 125.11. So that's that. And actually I could, so this is the pattern, the routine that these markets follow. Actually hasn't retested. So I was waiting. I could put on different strategies too. So I just showed you the Izzy strategy, and I'm long. If this does an ATR retest failure, which happens nonstop, then I can put on other strategies based on that pattern, the bark and the lick. And we just have funny acronyms for these trades, just make it memorable. The bark is just any blind ATR retest confirm of the volume event in the direction of algo guys. So I use this filter to be on the right side of these algos, right? So again, right now this algo guy is still trying to hang on bullish. Hopefully it does. So the blue is still not crossed below the red. If this blue crosses below the red, then that's a bearish situation short term, and you get these algos that play that cross. Right now this is still bullish, so I can put on barks and licks to the upside. So if this retests this zone, and I'm going to put an alert in here, so in case I'm on another market I don't see it, so that'll alert me when it retests that zone. And let's see if there's liquidity up here. There's a little bit. So yes, there's a ton of liquidity down here. I don't have specific rules that I won't put on trades. There are some traders that do that, and it's fine if you're consistent. Meaning, we all anybody that's been watching Bookmap and understands liquidity. This is just orders, large orders in the order book. This is just a heat map of what's going on over here. This is like a magnet. So the odds are this is going to get filled today, but so that's why you may say I don't want to go long because I want these guys are going to get their fills because they're the big money and they usually will push the market into their orders, and I know this because this is the game I used to play when I was a large scalper, right? The problem is you don't know when this is going to get tagged. So if I skip on this long, this thing could go up a full point before it comes all the way back here. So I don't want to, I'm not willing to risk these volume events that are showing me a bullish tendency just because, and not take that trade just because there's liquidity right here, right? But you could do that. There are a couple traders in my trade room that won't take longs if they see a bunch of resting liquidity right below the area, right? So that's something that you have to determine on your own if you're willing to take it. I took the trade. So I'm hoping it can, rip up. I can get out at certain places that are important to me, and then so say this did one of these, and I got a new event. Well, I could trade a lick trade, short back down to that if that happens, but that hasn't happened right now, so I'm long. That is working, and then wheat. I'll show you the loser. So natural gas number is coming out here in 5 minutes. There was an event in there earlier. I just didn't trade it. So I got stopped out of here. It looks like it was to the exact tick. So I took this trade earlier. There's your ATR. There's your retest. And I got long bark and lick on that one. And I put my stop. The ATR was tiny. It was like 1. So my stop was pretty close to this. And it stopped me out, looks like, to the tick because that's my MO. But, this is the probability. This is the edge, right? When you have an edge, then you just keep putting the trade on, right? This one was a loser. If I get another one, I'll put it right back on. That's how you take advantage of probabilities, aka edge. You've got to be consistent with your trading. You don't use recency bias, and this is all, we talk about this every week in here and nonstop in my trade room with the trading in the zone document here, right? You have to internalize this information. This is directly out of Trading in the Zone. If you have an edge, you're just putting the odds of success in your favor. That's all you're doing. And you can think of that about trading in the appropriate manner. So this is straight out of Trading in the Zone. I've added my stuff a little bit up here. But it's all about trading an edge like you're a casino, right? When you're dealing blackjack, I know I go over this every single week, but it's important. There's always new traders on here, and this is the most important part of trading. If you can view markets in this respect, then you have a fighting chance to be a winning trader, a profitable trader, right? The whole point, though, is you need an edge, a real edge, right? So that's the beauty of what we're looking at with these volume events. And, I have been watching thousands and thousands of these over the last 7 years now. And, you don't, so the point is, if you're using this information, you don't have to guess if this is an edge or not. This is an edge, right? It's now it's just monitoring yourself and following the rules and not doing, stupid stuff like I was getting at the recency bias. So for instance, if I lose on this trade, I put another trade on that's a loser. I don't, most traders will skip the next trade because they're afraid because they've lost 3 in a row. Like, oh, this stuff doesn't work. Okay, what's the next, on to the next indicator. I know from watching a million of these things, this is the best edge that I've ever seen in trading. So I don't shy away if I have 3, 4, 5 losers in a row. Just like a casino who's dealing blackjack to a whale or whatever, if he waxes them, 10 hands in a row, they don't just shut the game down for the whole casino, right? They may kick that guy off the table because that's what they do. I know that firsthand. But the point is, they don't just shut the game down casino wide because they lost 10 hands in a row, right? So it's the same thing if you have an edge with trading. You don't just stop trading it. Yeah, if you hit your daily loss limit, you definitely want to stop, right? We go over this. I go on these rants all the time too. So if you're, you shouldn't be losing more than, 5 to 6% of your trading account in a day. So if I did put on 3 losers and that hit my 6% for the day, then you shut it down because you don't want to be losing 10, 20, 30% of your trading account in a day. Some days just suck, right? Especially in this market environment. If there's no reason to blow out your account if things just aren't working. And that leads me to my next rant. And then I can do these rants because there's nothing going on, obviously, in these markets. Let's just take one thing to look at NASDAQ. On the flip side, you got traders. All right, did I fill in this? Hold on. I thought I had this working. What is going on here? This was supposed to be an easy trade, and I'm supposed to be long right now. I don't know why that. I could have swore I put that in. Hold on, see if I can still get in this. Then I'll continue my rant. 26.75, so it's right there. All right, I guess I didn't put that in. So I paid up a couple points. I got in at 27.50. So I'm long. This is the Izzy trade. Long there. My stops at 17.1. 100. So let me put the stop in. I could have swore I put that in. I guess not. Shocking that I made a mistake there. All right. So again, this is just an important area for me. Market broke out, came back, volume event in this Izzy zone. I got long. So that trade is working. Let's actually get some tick straight going. So everything that I have here that I'm using here, let me just put this in. I put this in every week, but so this is the drawing tool. I'll get back on my rant here in a second because it's my favorite thing that traders do wrong. Drawing tool, if you want it, this is the guide on how to get it set up. You got to go to the Discord channel with my, that's this here. Go down here. It's got zones. Where's that? They've got so many channels in there now, I can never find the damn thing. Hold on. Right here. And then you get in contact with this Andrew guy, and you can get access to the tool. That's that, and then here's the new indicator course, and we'll go over. Hold on, let me pull this up too, just because when I start talking about setups, people are always like, "What are you talking about?" 1 second, and let me post this while I'm waiting for this thing to load. Put this in this book, or I put that in YouTube. It's in Discord too. If in Discord you just got to scroll up. It's been posted about 10 times. So anyway, hold on. So this is what the course looks like, right? So so it goes over all the settings, every thresholds for each market, what's an important amount to trade off of, and then these are these other indicators that I'm using. Sweeps indicator, drawing the zones. I was drawing them wrong for about 7 years, but we've corrected that. And then these are the setups that I was referring to, right? So like for instance, the one I just got into in bonds, that was the double whammy, right? So that's what you get with the course. That's in there too. And then everything I'm using is all in here as far as discounts. And Bookmap's got, I don't even know how they are doing this. So they posted this today. Somehow this right here. So if you, the yearly, you save on the CME data because they've increased their prices. And it's only $327 for the year for the data, which is, I don't know how they're doing that. Maybe they have a deal with the CME. But anyway, they just posted that. I'll post this in here too. That actually is a good deal. I'm probably going to do that myself. Hold on here. Because you got to pay for data, right? Might as well get a discount for it. All right, so that's that. And then this is all the other, there's the course. This is the stuff I'm using free to my trade room. If you can't get in there, go to this website, Pulcinitrader.org, and you can get the spreadsheet. You can get the inflection zones that we've been talking about, the Izzies, and then you can get them combined if you want that, if you can't make it in the trade room. And then and these are other things. Here's the book map. I already posted the link, but there it is. And then you need the MBO data, and you need a rhythmic data feed. They're the only ones that have the CME MBO data, rhythmic, the only data provider, which is unbelievable to me, but that's it. And we'll get into Apex later. The spot gamma, we'll look at that. Actually, want to keep that up because I'm seeing some incredible things with this thing. And you can see it's moving in that direction. That's the Mag 7. See what S&P looks like. Not anything huge notionally so far today. So we say, actually it did move down pretty big for a while. Now it's snapping back. This is just one entity. This is just showing you options dealers. They have to hedge when they get loaded up. They have to hedge with futures. So they turn around, like in this instance, they had to turn around and sell futures. So I haven't even looked at ES. I'm sure it sold off on that. And sometimes they're the only game in town. Other times there's bigger money in here. So this did sell off, during that move down, a whopping 6 or 7 points. So that tells you something too. Like if you do see a notional move, not that there was an event here, but the more we're watching this, we're seeing tendencies with this too. So if you see a $1 billion move, this is actually 2 billion, and the ES kind of just spins in place, like that's not that big of a move. Somebody was absorbing this options dealer's activity. So the options dealer were hedging their, selling futures to hedge their positions they got loaded up on, and the market really didn't do much. Well, that's telling you something right there, right? Like this thing for a $2 billion move, especially in this market environment, this thing should have dropped probably at least 10 points. For just to spin when this goes down, then when this turns back up, then you see the big move. Again, I would use the volume events to correspond with this stuff, but as we were just talking about thesis, as far as a thesis, you can use that to say, okay, this looks like it's bullish, which is good because I'm actually long NASDAQ. Let's see what's going on here. It's just hanging around where I got in, but we're long NASDAQ. So anyway, what I was ranting about before I forget is about, you have your stop loss for the day. You hit 5-6%, you should shut it down. But other than that, you need to be trading your probabilities and you keep putting the trades on. On the flip side, I can't tell you how many traders, this is my pet peeve of probably all pet peeves, besides trailing stops to break even in the middle of nowhere so you can get algoed out of your trade. That's probably, this is a close second, these two. The trailing of the stops to break even just because you don't want to lose money or give money back. That's ridiculous. You want to trail your stops to something that happened in the market. My number one pet peeve, and I saw this from the minute I sat down on my trading firm back in early 2000s, it was, were these traders that they would get in there. I don't know why this was their magic number, but it was their magic number. They get in there, they start trading, they'd make $5,000, and they'd shut down their computer for the day, and they go sit in the game room and play ping pong and video games the rest of the day because they made $5,000. So how I can guarantee you at least half the people on this webinar do the same nonsense, right? If you've been trading for any amount of time, you know how hard trading can be, right? On days that just aren't, like we just talked about, a string of losses, days that stuff stopped making sense. It just happens. These are markets. On the days that you're seeing things clearly and trades are working for you, why in the hell would you stop trading, right? So I'm not saying you're up $5,000 and you hit your profit goal for the day. I'm not saying you give it all back. I'm saying, okay, tell yourself, I hit my profit goal. Now I'm going to give myself 1 or 2 or whatever percentage back, or two losing trades, and I'm done. I'm fine with that. I'm not saying give back your full profit. But what I'm saying is, if you hit your profit goal, you don't just shut down your computer. Things are making sense and working on the day. Take advantage of it, right? If you want to say, okay, if I get back 20% of this, so if I get back $1,000, that could be 1 trade, 2 trades, whatever size you're trading, then fine. Then you say, okay, I gave it back. I gave it a shot to see if I was actually hot, right? Like things are working for me. I lost back my $1,000. I'm done. I'm fine with that. I am not fine with you making $5,000. So I would sit there and I'd watch these morons in my trading firm. And trust me, some of them were major morons. And that's what actually motivated me when I first started. I'm like, if these dipshits can make money, I know I can make money, pardon my language, right? So it was the same dipshits that would go to the video game room after they were up $5,000. Like, if you can make 5, why not sit there and make 10? If you can make 10, why not make 20? So I would sit there all day long. Yeah, if I hit my stop loss on the downside, I'd be done. But I never quit because I was up. It makes no sense. Take advantage of these markets when things make sense, because there's so many days that things don't make sense. So that's my rant on that. I haven't ranted on that for a while. Got a whopping 6 points here in Q. So let's just look at some of the areas where I might piece out of this. Again, this trade is just horrible. So I really don't, the default's always up when the trade's horrible. That's just the way it is. So an important area here, VWAP, we're at VWAP. So this is why this is probably spinning around right now, because you got guys that like to fade VWAP, especially when it's like downward sloping. I could get out of some here. I mean, with a whopping 7-8 point win. I don't get out of VWAP unless it's confluent with something else. I don't see anything else here, market profile. So basically, I'm holding this trade to red lug. And these are incredible. We haven't talked about those yet. They're called Ludwig levels. Go to Ludwig. It's on this here, down at the bottom here. You can get the free 3-day trial. But anyway, they're awesome for targets. They're awesome for support and resistance. For instance, if this comes up here, we actually have a trade, say there's a stop run into the lug where I would fade that area. But right now, my main target is the lug because there's really nothing else up here. So I would not get out of any of these trades. You could get out at daily value area. So daily value area is just one standard deviation of VWAP or these extreme areas. This is barring something else coming in on the volume event side, right? Say nothing happens, I'm going to hold this puppy, see if we can get to the red lug. If I get an event, the driver of my trading, and it's bearish, well then I'll get out of the trade. Other than that, I want to hold this thing and see if we can get up to 76. So that's that. And you can see this relative volume is just pathetic, right? So it's like, so the ES looks like it's at 50%. This is barely hitting 60% NQ. This is horrible. This is Algoville at its finest. So we have another trade in my trading room too. It's called a reversion trade. That's this part of the spreadsheet. You get that as part of the spreadsheet subscription too, where you're taking advantage of these. And this highly, highly likely it's going to happen with this event, right? Where it touches, and you can see these prices on here. Maybe we'll take one of these trades. I don't know. Let's see. Make sure this is up to date. That's a whopping 9.87 now. Just pathetic. So I tell my trade room too. I told them yesterday, and I've been telling them, you may not want to take these reversion trades with this small of an ATR. So we play. This trade is literally, and it probably will happen, but again, it's so tight. You get the volume events. These markets get an ATR, and we'll come back to the volume event. They get 2 ATRs, we'll come back to the volume event. 3 ATRs, volume event. You don't usually see more than 3 before it snaps back or something new happens in equities, but these are the sweet spots, and then this is where you'd be getting in these trades, right? And it's just literally you're just playing for a move back to the area. I'm actually in talks with a trading firm. I was going to release a course for this. You can learn it in my trade room. I go over it all the time, but I'm probably not gonna put out an official course as of right now because I'm talking about a trading firm about automating this and running it. So I don't want to give it to the world, if I'm going to be trading it, right? It kind of dilutes the whole thing. Doesn't mean I won't talk about it in my trade room, but that's one of the perks of the trade room. You come in there, you're going to learn on the fly how to trade this. But I just don't have step by step right now. I was going to put that out, but that's on hold. But you can still learn this trade. It's not that technical, but it's unbelievable how often it happens. We already saw it happen in wheat today, right? This is a perfect example of these markets. They get the 1, the 2, the 3 ATR. The sweet spot for grains is usually the 3 ATR, and that's exactly what this looked like. It looks like that was. Did it twice, right? Comes back to the volume event. I'm so glad I got stopped out to the tick there, by the way. See how it came back? See how it came back? Stops me out to the tick, and now it's probably going to take off. But anyway, that's the reversion trade. There's something to be said. You just gotta, it's just like we were talking about with the edges, right? You've got to take as many as possible. That as a trade, you need to be really on top of the market. So here, we'll go over this too. This is another reason why I may get out of some of these, like up here, and we'll talk about this, and then I want to go over something else. So you can see Market Pulse just fired off. This is a perfect example of this. We'll go over this here in a second. I just lost my train of thought. What was I talking about? Oh, the reversion trade. So wouldn't surprise me one bit to see this come back to this event. And this would be, let's see, the 1 you would have been in a 24, you stop out at 35.75. So that would have stopped out. The 2 and the 3 are still alive. So you would have been at 32.75 on the 2. The 3 hasn't triggered yet. So on days like today, when you see really low relative volume, these are much better trade. The 1 didn't work, but again, if you're going to do them, there's guys that take the 1s, the 2s, and the 3s. Like the 1 may lose, and you get in the 2, and that one works. Or you lose on the 1, and then the 2 and the 3 works. Right? You got to decide how you're going to play them. The point is, play as many as possible, and this is why I'm in talks with the firm to have this automated because I can't keep up with it even on my own, let alone on these webinars. Right? So once we get that automated, the least that's going to happen for you guys is I'm going to have concrete stats on the exact, what are the sweet spots, what are the percentages for NASDAQ, how many times does the naked 1 work, because we have a 1 aggressive 1 ATR, or you can wait for the 2 ATR and take the 1 coming back. I'm just giving you guys examples, but anyway, we're going to have stats for all that stuff. So what I'm watching here, where I may get out of a couple of these, is I use Market Pulse to help me. So this Market Pulse is set up to most buying or selling. So I'm going to show you actually something else that I just learned from Bruce watching one of his webinars the other day. It's very, very interesting in horrible conditions like today. But this is for the NASDAQ, this is the volume pressure imbalance algo, right? So this is just showing me the most buying or selling for the last hour I have it set to. So it's very important, and you can see I should already be out of some of these. Let me get out. I'm gonna get out of a third of these. I'll go over why here. All right, so that was a whopping three. It was like a 7-point winner. But anyway, remember I was long off of this. Why did I just get out of 3 there? Because market pulse fired off. This is the most buying in the last hour, especially since the open, right? You can see the sweeps indicator as well. Well, what happened there? It failed instantly. So we have a pattern here, and I can maybe show it that I posted in my trade room. There's examples of these. It's just the same. It's a pattern, just like we talk about patterns with the SI indicator. It's the same with market pulse. This just happens so regularly, it's crazy, right? So you get the buyers, they're off sides. It'll move away from the area. It'll retest. And then when it makes its next low, that's where you can get out of some. So I just got out of some because of that. Doesn't mean it can't rip up now. This is pretty fleeting. But we saw, I think it was last week we talked about it, crude. I was long crude. If you remember, you can go back and watch that webinar. And I got out of some in crude for this exact reason. The buyers were really aggressive. They were wrong. It did the retest. I got out of some at that next low and then ended up selling off like I got stopped out of the rest of them, right? But I got out of some. And this is still failing, right? So this is why I don't get out of the full position, because this stuff is pretty fleeting. You know, buyers can come right back in, but this is telling me something real time, that these buyers were aggressive and they're not winning. And it moved away and it comes back, and these buyers are like, okay, get me out. And that's that move a lot of times. So that's why I got out of that. Let me just show you this real quick. I think I showed it last week too, but it's good to see. So that's in the trade room as well. Where's it at here? And any questions, guys, throw them in the YouTube channel. So here we go. So just watch this quickly, and I'll look at some of these questions in here, and I can stop talking for a second too. So there you go.
Market pulse, a couple fade examples, and a couple of continuation examples. So this would be a fade example where you can see.
So this is exactly why I got out of some at NASDAQ, right? There's the buying. This looks exactly like NASDAQ, right? Here's the move away. Here's the retest. Next low. That's how I would trade this. You can either get short off of it. This is more like a scalp type trade. Or if you have positions on, you can get out of some. That's what I just did with NASDAQ.
You have 2 different heavy buying areas here. Right there and right there. So this one actually held, right? But that's not where you judge these initially, right? So it moved higher, and then more buying even came in here, right? So the way I've been seeing to trade this is to, when it comes back and it retests this area, well, first of all, this one failed immediately, but you want to see if this one holds, right? And if it can hold and then get back above here, you can buy that off of this one and put your stop below there. And then on this one, you would wait for the same type of move. Well, neither one of these held. This one tried, and then more buyers came in immediately off sides. And you can see here's the retest right there. So the minute this gets back below that last low, that's a good place to short the trade with the stop right above there, right? So we'll talk about these are aggressive buyers. How are you feeling if you're aggressive there? You think you got it? Step on the gas a little more. You think you got it? Moves against you immediately, comes back. You're like, oh no, you get out, right? So that is an example of a fade trade. Then you can see this is more of a continuation here. So you had this selling, heavy selling there. There's your move away. There's your retest. It holds on this in this instance, right? Then you see more selling. That held. Then you actually see some buying come in, and they never get in anywhere near. Moves against, comes back, fails again. They don't get anywhere, meaning they don't get anywhere near like getting it back above this buy area. So these are continuation areas where the sellers are aggressive, retest holds. Sellers aggressive, retest holds. And then you can have some buyers that get aggressive that never can get above there. So these are instances where even if you didn't short here, you can short here and then put your stop above where this first selling came in, there. Right? And then write it down to whatever, if you have a specific area on a chart that we look at, or
So that's the trade, and again, it's fleeting. It's not as important. I would not use that as the driver of all your trading. Yeah, you can scalp off of it, but it's pretty fleeting. Like I said, right now I got out of some of these because the buyers didn't win in this instance at first, It doesn't mean they can't come right back in, but I wasn't willing to say, okay, they bought here and you can see it did bounce off that one, but this is the most recent, right? I wasn't willing to say, okay, if these buyers are really aggressive and they're not winning, well, why the hell do I want to say start? And this is a perfect example. Here they come again. Here's another one. So if this fails, I'll get out of some more, right? Or this could just rip up. I still have some of my position on, but I'm not willing to hold the full amount if I see real-time buyers not winning. That they came back in. It did hold this first area. So, okay, that's good information. I'm still long 7 of the 10. I hope it keeps going. And I'm not mad. It ripped higher, right? I traded what I was seeing in the real-time volume, and I got out of some because I could have easily done that like it did last week when I showed this exact example in crude. Here you go. You can see they're being aggressive here. Let's get the tick strike back up. And I'm going to show you something else that's even more, it's not more, but it's pretty unbelievable. And you're playing off these algos. It's the price change algo of this market pulse. I literally just saw Bruce talk about it the other day. I'll post that video. It's pretty unbelievable, especially on days like today where there's no big money coming through. We'll go over here in a second. I just want to see what happens here. So this is the same thing. So what I could do here too, you can trade these where you add to your trade as well, and you're not risking. So for instance, I'm risking way back below here an ATR.
At 11 a.m. Eastern Time, get our weekly EIA data, crude oil inventories.
What, today's the crude number?
5 million on the prime, 2.90.
Oh yeah, Monday was a holiday, so it's on Thursdays. Right, so we got the crude number in 10 minutes. I forgot what I was saying. Oh yeah, so I got long off of this event, right? So my stop is an ATR below there at 17,100. We said. Well, the same reason I got out of this, I could add to this too, depending on how this reacts here. Maybe we'll do that just to show you, right? So you had aggressive buyers. This would be a continuation pattern like I just talked about in that video. Now let's see what happens here. It doesn't mean you just buy it as soon as it moves out of here. I would want to see it hold, come back. Then on the next high, I could add to my long. And then I did for that part of the trade, if I add to it, I'll just risk below there. So you can see how you can add to your trades. This one I got out of some, but you can add to them with very little risk, right? For a portion. So let's see what happens here. Any questions, please throw them into YouTube. While we wait for this to happen. GH, do you think support and resistance and pivot points are the best tools to trade futures? What tools do you recommend for the best main ones? A lot of people use pivot points. A lot of people use Fibonacci. Guys, it's whatever you think is important. If you see patterns at these areas, I'm not saying any one is better than the other one. I don't use pivot points. What I use are my zones. So the important areas I look at are my zones. I look at and the Ludwig levels and market profile composite. Those are my 3 main important areas that I use in my trading, right? It's not to say that something you're looking at isn't as powerful or more powerful. That's fine. But what I'm telling you is the edge is having the real-time volume events happening at your important areas, right? That's the key. But I just use these lugs. We call them lugs, so I have to say Ludwig level 80 times on a webinar, and the market profile composite. This one needs to be brought up. And these are just days, value areas of days merged together, right? So, yes here. And I'll show you this price change algo here too, market pulse. So these are the areas and then we actually have a trading. Remember we talked about this trading strategy document. So these are important areas, right? So this is let's stop run at the lug. These are the Izzy zones. Down here you got Profiles in Courage, I named it, right? It's kind of a funny name. That was John F. Kennedy's book. Just help it be memorable. We call it PIC. That would be in one of the areas that I just talked about, an important area. So for instance, if this market, if ES comes back down to the top of this is a 2-day composite, and I get a volume event, I'd go long. If it turns into a bullish event. On the flip side, say it came down here, got inside here, got a volume event, and it's bearish, well, I would go short. So these are important areas. These are my important areas, right? Izzy zones are my important areas. And then I wait for the volume event because that's what's happening right now. All right, let's see if we can add to this thing. So this, part of this buying were stop runs, and it was 136 stops. I don't think 130, in this market environment it could, but a lot of times like you'll see stop runs, but that's not the cause of the entire buying for the spike. To have it spike is the most buying in the last hour. And then you had a little more here that wasn't quite There were sweeps, but that wasn't quite. This is set for 70%, so it'll only draw that yellow tip if it's 70% or more. So there's the routine right here, right? So I would trade off. You could wait for this whole thing, include those sweeps. I don't know why that's that color, right? And then wait for that. That's what I'll probably do for this one, just because I know this wasn't quite market pulse, but let's just see how this happens. So again, this is telling me something's up here, right? This is another round of buying that is not holding. Do I get out right there? No, I want to see it retest, which is kind of doing, and then you can get out of more at the next low. So I'm going to get out a couple more here. Because this area is not, why? Because why do I want to be long if these buyers are not winning right now? Again, I'm not going to get out of my full position. If this comes back down here, I'm going to get out of 2 more. Like right now. Let's see. This is how you utilize real-time information. Put that at 30. All right. All right, so I got out 2 more. Why? Well, we've just seen 2 instances where the buyers are not winning. They keep being offsides, right? Offsides. Didn't get out of. I still have 5 on. If it rips, fine. I'm fine with it. But I'm just utilizing what I'm seeing real time. See. The other thing you could do too is like, okay, I mean this one already violated, but you can just say, all right, well I see all that buying and I'll get out if it gets below there, right? This pretty much would be a scratch trade. You can do that too. Again, this is all subjective. This is how I view it, right? And I just keep seeing the same patterns over and over and over and over. So that's why. So this is a very good tell right now. If this thing can't get above this, that was even a bigger move down. I already got out of 2 there, but I just am not favorable. I don't think this thing's going to rip right now. And we already know the odds of it coming back to this zone are very good on top of that. So this can be an area this is failing. Well, let's see what's going on with the euro. Let's see if that's giving us any information. So the S&P's kind of just hanging there. Mag 7's hanging up there. NASDAQ is not doing much, so not getting much information from that right now, from that entity. But there you go. Like that, this is telling me something's up here. I'm still going to hold on a part of my position based on my rules off of my. This is the main driver of my trading, right? This stuff. But something's up at least short term, and that wouldn't surprise me one bit. And this is a good way you can take your reversion trades too. And I'm talking to my room, the guys that are using it. If you keep seeing these areas fail, then you can pop in this thing and just catch that move back down on the zone. It's very, very likely. Now you can see. Here's some aggressive sellers. There's a market pulse. Highest selling in the last hour since the stop runs over here. Now, see how that reacts. This could be a continuation short if you want to. This is more scalping I'm talking about, right? But this is not surprising me. What these guys are probably these guys that are offsides, getting the hell out of their trade, right? That's why I got out of some up here. So this is just an incredible thing that you can be using. For those of you that just love scalping, that think you're going to make your millions staring at this dome, it's not going to happen, in my opinion, because if it was possible to this day, this is how I made millions of dollars in the past, I would be doing that. I don't see any edge in staring at these numbers anymore. I do see edge if you want to scalp in this stuff, if you follow and you see the patterns in it. Speaking of which, let's check out this price change algo. Okay, so let's turn this on. So this is, let me post this too before I forget. This one's Bruce. I was just watching the other day because I'm going to have a webinar. I got to talk to them, but I'm sure they'll do it because they're awesome. A webinar on, because they've added all these different market pulse options, right? Order book pressure imbalance, price change, spread change, sweeps pressure imbalance, volume pressure. So I've been using this one. They've added like 5 of them. So I don't have a full understanding of what these are all showing me. So Bruce did a webinar a few days ago talking about the price change. You would be amazed. Let's just look. And again, I'm not an expert at this. I just started watching the other day. But once again, trading's all about patterns. This thing is ridiculous. Let's see. This is the problem is they need to change this so you can see, like, one of them is a 5-minute price change, the other one's an hourly. I don't know why they don't have that. I don't know which one's which here. So this one, actually, that's volume pressure. This is the price change. So I got one set at an hour and then one set at 5 minutes. So when you watch the webinar with Bruce, he's using the 5-minute one. So I pretty much can tell here. Let's see. If you see a ton of them, that's the 5-minute. Yeah, so this has got to be the 5-minute here. So this is stuff's pretty amazing where you got to remember this works until it doesn't work. Right now, algos are running the show. So these algos pick up when there's an outsized type of move. You know how we use it. Bruce talks about this too on that video. I'll post it here in a second. Like when the markets get an ATR away from important volume areas, they snap back. That's a reversion trade. Well, there's something to be said in market environments like this. When the market makes too big of moves as far as what's happening currently, these algos jump in and snap it back the other way, right? So you can imagine, yeah, it works until it doesn't work. So this is playing games. I'll point out about 10 of these. I could just see them right now of this working today. It's all great and fine until, say, big money comes in here. Well, you're going to see big price changes, and if you play the fade, you're going to get run over, right? So this is how you have to view it. These algos are 80% or more of the trade in here. So 80% of the time or more, it's Algoville. 20% of the time, big money comes in and does what they need to do, right? So you've got to accept, this is all about trading the probabilities again. You got to accept if you're going to, like we're going to go over this, if you're going to trade this price change, it works, then you get run over because the big money comes in 20% of the time, right? So 80% of the time, this is probably going to be awesome, especially on a day like today. Days where there's high relative volume coming through the market, we looked at that earlier, there's none. I would not be messing around with price change because you're going to get outsized moves that these algos are not going to be able to fade because the big money's coming in hammering the market or whatever, they're buying it. So let's look at some of these. Let me post this too real quick. It's this one here. He just did it the other day, I believe. Hold on here. Post this in the room. When you say your zones, can you define your zones? Which zones, GH? The volume events, or if I'm talking zones, I'm talking these are my inflection zones. So these inflection zones are where important things happen in this structure. So there's 4 important areas of charting, right? Tops and bottoms of balance areas. We talked about those today, right? High volume nodes of balance areas. Let's just look real time. That's what we were talking about in NASDAQ. It's just a better example of balance areas. Crude number just came out, so we might be getting something there. Anyway, tops and bottoms of balance areas. That's where this zone is. High volume nodes. I don't usually draw the high volume node because I'd have 85 zones on my chart and it's just too much for my brain. You can eyeball where a high volume node of a balance area is, right? Like this would be a balance. I know it's right there. You can see this was a fail break out of that. Just ripped right through there. These are some of the best trades out there. And then the other areas that I will mark, and that's why this one is marked. Actually got a selling tail there. So tails are, it's not a huge tail. This isn't really important. This is a big buying tail. That's that zone. So you had directional conviction. Well, those are the other two. So directional conviction, meaning outsized huge moves in one direction, and buying and selling tails. So this one was directional conviction. Market came back and put in a huge buying tail. That is really important information. That means it was instant rejection. So you can bet this area, especially this zone, I would say either one of these zones you're going to see some kind of bounce out of there. And if it doesn't, then it's telling you something even more. But this zone is really important on a comeback because that's where this launched from, and you had the buying tail. So anyway, those are how I draw these zones. You can draw these yourself, right? But I've been doing this for so long. Mine are very powerful areas. But I still don't I know how powerful these areas are. I still don't trade them naked. I still need to see a volume event in the area. So again, these are important areas that I think are important. I still need to wait for a volume event though. That's why I keep trying to hammer home to you guys. You may think other areas are important. Fine. Wait for your volume events. And here you go. Shocker, shocker. Here's your retest of the zone. So let's see which one of these reversions worked. So do you see how I flattened? We'll go over that here in a second. But let's see. The one obviously did not work. The 2, you would have been stopped out at 45. We've been seeing these lately too. Yeah, he's still alive on the 2. So the 2 and the 3 worked there, right? That did not touch 45, and the 3 worked. So you would have lost. This is what I'm talking about, being consistent with these things, all right? So say you say, okay, I'm taking the ones, all the twos, and all the threes. Well, the one stopped out. You got the two. You never stopped out of the two, and you got the three. Right back to the damn zone. Over and over and over and over and over. That's why we take the trade. Patterns. So back to this stuff. What did we do up here? I saw big buying. I saw big buying. Most buying in the hour. I kept saying there's something up. You know, again, this could turn around and buyers come back in and it rips. Fine. But at the time, I'm not willing to hold my full position when I see these buyers aren't winning. And then here you go. Let me know if you've seen this pattern. Just talked about it. It's unbelievable how these things just keep doing it, because it's algos, right? Algos are not like changing what they're doing like humans. They're just they know, they can see this like we see it. There you go. This, let me make a better example of this. So this did rip out of here at first, but it never made a new high. So you would never say, well, I'm trading this on its own in a vacuum. I would have never gone long there. And then here's the pattern to the downside. Moved away, came back, failed, and go short right there. And you can use these areas to get out, traditional areas to get out, or wait for a new market pulse the other way or whatever. But you can see how these work. Buyers off sides, sell. So this was a fade if you're doing just market pulse, and this was a continuation if you're doing market pulse. You know, these aren't, you could catch monster moves off these, but again, this stuff's pretty fleeting. It's just showing you buying and selling that's happening right now. These are not as important as the volume event, but these are still volume events, right? So, and you can see it even with the sweeps. So that you saw it on market pulse, but then you see these sweeps coming in too. So there you go. So, you know, I'm still long 5. I got out of a few. I'm fine with it. I did think this did the official retest of the price of the zone. Let's see here. What was the price? I'm just looking for the reversion trade where you've been out. 16. You may have missed it. I may have jinxed you. I'm talking to my trade room. Yeah, they only got to 1650, so it has not done an official retest of that zone. It probably will, but hopefully I didn't jinx you guys. So there you go. That's that trade. Surprised there's nothing in crude. You know, now that we talk about thesis, the other way you can come up with thesis, we've talked about liquidity. See, some days all liquidity is in one direction. This is telling me that this market's probably going to be chop fest like it usually is, right? Liquidity, liquidity, liquidity down here. So it's probably going to be a range type of day, right? So there's days where you'll pull up a market and you'll see just bands and bands and bands of liquidity. You can bet it's going to get there. Doesn't mean it's going there right that second, no, but this is called the lick trade. So if you see a bunch of liquidity and you get a volume event and other things can form to get in, like the algo guy and stuff we've talked about, well, that's a trade. We can trade for that because you know it's very likely going to get there. I'm sure we'll put one of those on before the day is done. All right, so there's nothing happened in ES. So back to this price change algo. All right, so I should be out of, what am I doing here? I did the same thing a couple webinars ago. So I need to be out of some of these bonds, especially, look, this was a 15 tick winner. What am I doing? Hold on. You know, as long as if it didn't hit anything important, then I'm okay with it. But I guarantee this hit something I could have got out of some of these bonds. I'm long 3. We already talked about that trade off that double whammy. How did that work? Hold on, where the hell is it? Here we go. Yeah, just an idiot. This is the problem with my trading on these webinars, and I'm fine with it. But you know, look where this bounced. I would have been out at 2 of the 3 here. You had prior market, one of my important areas we've already talked about multiple times. Right? Bottom of this market profile composite, and this was like 3 standard deviations. This is just F on my part. I'm going to get out a couple here. I just cost myself like 10 ticks on this thing. And that's a substantial move in bonds, 31.25 a tick. So I could have been out right at that market profile composite. This thing's pulled back 10 ticks. I'm going to give myself an F on that one. Terrible. I have 4 on. All right, I'll just get out of 2 here. That was a whopper trade. I just screwed that up. So, again, I'm still in the part of the position, but I would have been out. I watched it, and that's where you can use market pulse here, too. I don't have it set up here. Let's just do one just to set it up. I can't believe how often I do that, though. So you hit create. There's bonds. You want to go. So this is, we haven't talked about the price change yet as far as looking at examples. So this is the one I use currently, volume, pressure, and balance. I don't know why it does that. Hold this so confusing. You don't need to do it. Uncheck that. I got bonds here. And then I want to see the most buying or selling for the last hour. This is all default, so just threshold 70%. This is the delta percentage. That's the tips that I've been talking about. Where I'll show you the color tips. Start it up. You'll get this little widget kicking in here, and then it'll populate these areas. So this was a great market pulse area down here on top of my main driver of my trades, right? So this was that buy ice. So you had buy ice. You could see the market pulse went, that was almost extreme selling that triggered the buy ice. Then you had big buyers come in. How's that trade, right? So I would have put this on regardless, but that's just additional information where you say, okay, so the big money's buying this secretly, and then someone's buying it market this because these are market orders, right? This is 100% of the biggest buying in the last hour, and then look what it did. Right? This is, guys. This is why real-time volume is. If you are not trading with this, this is actually funny too. Going back to the story of the trading firm that I'm probably going to hook up with for this reversion trade stuff. They did not know about Bookmap or the CME MBO data. That, like, I almost fell off my chair. How could you have a trading firm with your traders that don't have this information? That just shows you what an edge we still have, right? Like, trading firms aren't even using this, some of them, right? So take advantage of this, like our own little secret stuff that I can't believe a trading firm doesn't know about this stuff. But anyway, because it's the most important thing that you can ever have in trading, in my opinion, like I've said 5,000 times, but I was pretty shocked on that. Let me change the colors here because I'm colorblind. I use the selling for black, and then I use the buying for yellow. Hold on, why can't I get that? Oh, by the way, that zone just, here, I'll show you the NASDAQ. Surprise, surprise. I almost jinxed you guys that we're taking the reversion trade, but it worked. All right, so there you go. You had market pulse and buy ice down here, and I missed my exit up here. That's very upsetting, but that's what happens when I'm in these webinars. Anyway, here's your retest of the zone. Another shocker, and we'll look at it bounce right off of there. You think these zones are important? You think the algos can pick up where this activity is? Absolutely. That's why we have that trade. And this is actually, I could take a bark and lick long here too. Let's check algo guy. Because it's never retested. This is the first retest. I have specific trade strategies for this retest and confirm back out, right? If I can find algo guy. Let's see here. Good old think or swim. Thing just disappears, and then I have to channel through 85 charts to find it. Okay, there it is. So algo guy's still bullish. They're on top of each other, the short term, the blue, and the long term. Again, this is just a moving average, exponential moving average ribbon. I post every time. I'll do it one more time. So I always get questions on it. This is a great resource for this. You can come up with trading strategies. We have a couple, but there's about 50 you can come up with just this thing. Where's it at? I always forget where I put this. Here. Hold on. There he is. I'll put this in YouTube. You can learn about it. It's important because these algos, some of these algos are based off of this moving average stuff. So you want to pay attention to it. That's why I have a filter with that thing for my bark and my lick trades, because I just noticed almost all my losers when I was, with those trading strategies were against algo guy. So I'm like, why won't I just use that as a filter and increase? You just want as many factors in your favor as possible, right? If I'm going to just take those trades, I know the volume events are edges on their own, in their own right, but if I can get another entity in my favor, then that's even a better edge, right? So that's why I use that as my factor for that. And we'll go over this in a second to mark the change. Let me post this in here. That's algo guy. Okay, so you guys got some questions here real quick. I already said what the zones are. Does this bookmap strategy info work on currency and gold? Also, yes, gold. There's here. Stop me if you've seen this pattern before. I didn't trade this when I was doing my zones today for my room, but this was pre-market or before I got started my book map. But the drawer is on my other computer anyway. Hey, you ever see that routine? You ever see that before? See how the markets responding to that? So that's gold. Currencies I do not trade anymore because they all of a sudden out of nowhere took away the icebergs. And again, my opinion. So you got to remember, icebergs are hidden orders, right? The big money can't be real happy. They're spending this money to have these hidden orders in the order book, and we can see them, right? Again, these are all my opinions. What I think happened, 2000. There was a period like 2014 and 2017 where the retail trader was dying because they can't make money because these algos just were running everyone ragged, right? So it got to the point where there were the retail trader. I mean, there's statistics on this. You can look it up. Retail trader was like going the way of the dinosaur. So it was algo versus algo. Well, these algos don't want to be trading against other algos. They want your money. We're the dumb money. I'm the dumb money too. We talked about the stop runs like the bonds today. We're the dumb money. We're what feeds the algos. If you guys don't think this is a competition, then you're not understanding what's going on here. These algos are trying to take your money. So anyway, the point is they were going head to head. Their profit margin couldn't have been very good trading against other algos. So this is just my belief that the CME decided to release this MBO data to kind of throw the retail trader a bone, saying, here you go, you can see a little bit more enhanced information to help the retail trader. Because these algos, these big firms need us in here to take our money, right? That's why 95% of traders fail or whatever. So that's why I think they started to show this. But now back to what I was saying, that again, my opinion, the trading firms can't be real happy that we can see this information. Like, this is the whole point of an iceberg, is to hide your orders, right? Because they're hiding from these algos because they don't want to. If they just dropped huge orders in this order book, the market runs away from them. So they want to hide their orders in the order book. They can't be thrilled that we can see their information. But they probably say, well, yeah, they could see the information, but if we didn't have the retail trader, we're going algo versus algo. That's my opinion, right? So now fast forward to the currencies. All of a sudden, out of nowhere, no more icebergs. I wonder why that is. Again, my opinion. Back to the big firms. I would bet, if I had to place a bet on it, that the big money went to the CME and said, yeah, we don't, the banks, right? That's what currency trading is. There's FX and then you can trade the futures on it. Yeah, we don't really like that people can see what we're doing. Why don't you go ahead and get it off that information off the charts. So that's my opinion, like I said 12 times. So anyway, long story short, that's why I don't trade currencies, because I don't have all the information. All the information is the volume events. That's why I keep saying, if you guys are not using Bookmap, that's why it just shocks me that trading firm doesn't use this stuff yet. They're going to, because I educated them about it. But if you're not using this information, you just don't have all the information. Yeah, I'm not saying what you're doing, your areas that you've traded traditionally for the last however many years of trading, I'm not saying they can't work, but I'm saying you don't have all the information. So yeah, they may work, but if you get your areas with this information, now you have a real edge, right? It's the edge, in my opinion. All right, a lot of ranting today. All right. Eventually we'll cover this new price change algo. Did I already post that in the room? Hold on here. No, I don't think I did. Let me answer a couple more questions before I get to that. Gee, Scott May asked, did you ever think of not using a stop? The idea is the price will always come back to that level. Just wait it out. Yeah, good luck with that. That's almost comical. Yeah, the price will always come back. No, it won't. Majority of the time, yeah, it will. Kind of like these volume, the market comes back to the volume events. If you don't use stops and you think it's going to come back, yeah, good luck. Your days are numbered. That's my opinion on that. That I hope you're kidding with that, or if you're using someone else's quote. But whoever's trades like that, good luck. It may work for a while, and then you're going to have a day where it doesn't come back, and you're going to blow out your account. You'll be done. Brent Drake, what is a good profit day for a beginner? $100 a day. Guys, I don't know, and it depends on your account size, and you can't get in here. This is what another one of my pet peeves. All right, well, I'm going to get in here, and I'm going to make $500 a day. If I can do that, I can quit my job and have that income. Yeah, you can average $500 a day. You can average $5,000 a day, depending on your account size, and that's the other beauty of this spreadsheet. you plug in your risk, right? So if you got a $50,000 account, this is why I can't say for a beginner. Are you a beginner with a $50,000 account, or are you a beginner with a $5,000 account, right? This is why you want to be using Apex Trader funding. We'll go over that too. But say you got 50 grand. Okay, well that changes everything, right? I wouldn't be risking 10%. I'm more aggressive with these Apex accounts. But say you're got a $50,000 account. You're only risking about 2% of your account size on each individual trade. Well, based on that, you could put on 2 full NQs or 20 MNQ, right? If you got a $5,000 account and you're following the same 2% rule, well, you can't even put on a full contract. You only put on 2 MNQ. So I can't tell you what's a good day, what's not a good day, right? As far as what you should be averaging. What I can tell you is people that get in here thinking this is like a job where you're going to make $500 a day or $5,000 a day every day. It is never, ever, 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 ever going to happen, especially as a click trader, right? Yes, you can average that. Your P&L is going to look like that. Hopefully it never looks like that on the downside because you're stopping yourself, but you're not ever going to make $500 every single day. It's just not, that's not how markets work. You can average that if you have an edge, absolutely. So don't come in here thinking you're going to make money every single day you trade. It's not going to happen ever. I'll bet my life on it, right? So that's that. But for a beginner, again, it depends on your account size. What's your account size, and I can give you a better guesstimation on what you can average a day if you're following the rule. This, again, another beauty of this spreadsheet. If you don't have something like this, you can get it on my website. I showed that earlier. You can get that right there. It's worth its weight in gold, in my opinion. This thing is worth millions of dollars, in my opinion. And I had guys in my room help me build this. But you just plug everything's here. You plug in your zone prices with the SA events. You plug in your ATR. You plug in what your account size is, how much you're going to risk, and it tells you exactly the size you should be putting on based on your risk. So if I'm trading a $50,000 account, I can risk $1,000 on that trade, right? If I'm adhering to the 2% rule of loss. Then this tells you the exact prices you get in, where you stop out, and then for the validation price for the rules of my trade, so on and so forth. So you get all that in that spreadsheet. So again, Brett, if you want to tell me what account size you're talking about, I can give you a guesstimation on what you can expect a day. But I mean, overall, not a day average. Other than that, I don't know. Brent, a good strategy is 1 to 2%, absolutely. And I posted that. I think trading for a living. Good morning, Scott. Which time frame ATR do you use? The ATR is 5 minute. Wilder's ATR. 14 period. So it's all, this is just Thinkorswim default. You can get anywhere. You can see the 14 period there. All right. And right now it's a whopping, that's not, for lately it's not that bad. 2.74. Let's get this current here. Hold on here. So guys, this is all fractal too, right? I was showing you a 60-minute chart, but it's not as powerful as the longer time frame you go out, the more powerful it is. But this is the same kind of stuff, right? This was yesterday. Build and balance for hours, broke out of balance, right? So I'd watch that as it comes back. You can see it, on the. So if you were drawing zones here too, I would make, and you can see this launch basically from this high volume node. That's directional conviction. I will bet, when it comes back there, you're going to see some kind of bounce. If it doesn't, that gives you information too, but the odds are. So you can see if it comes back and you get a volume event, you can say, I'm going to take that long off of where that launched from yesterday. You can do that just looking at the chart. But this is another example of an important area. I know that area is important. This thing launched, looks like 10, 15 points, not a big move, but it did launch out of that balance. Does that mean I just blindly go long there? You could, or you can wait for a volume event that's bullish, then you have way better odds, right? Or use market pulse down there like we've been talking about, so on and so forth. All right, what's going on here? So there's your retest of the zone. And remember, I got out of some. I'm still long this. My original stop is down here. There was not another event to trail my stop to, but you saw earlier I got out of some when these buyers were offsides, right? So if it stops me out, stops me out. At least it's not full position. I used real market activity to help guide me on what was happening in real time. That's just doing nothing. All right, let's try to get through this real quick. So this is the price change. I don't know if I just posted that or not. I'll post it again. But so this is the 5 minute one. So every time this market moves like an outsized amount of points, these algos snap the thing back. Again, this works until it doesn't work. The algos are playing games. This is why you get whipsaws, right? They can pick up when the market moved too much. Watch the video. Let me just make sure I post it. Well, let's go over these first and I'll post it again. So this one didn't do much. Tried to pull back a little bit, right? So you see that? Did pull back a little bit. Here's another one. Look at that. These are just small. Again, if you're gonna scalp, if you just demand, you insist on scalping, the best way to do it is with Market Pulse. So you got the price change. You can use the absorption. He was doing that in the webinar. I can't figure out how to get it in one line. That's why I want to have the webinar with them. Just watch the video. You can pick it up. But just price change alone without absorption algo, you can see every time this thing makes an outsized move, these algos snap it back. Here's another one. Snap it back. Let's keep going. There's another one. It's just amazing, guys, and it's because algos run the show. Here's another one. Market moved too much, snapped it back. Here's some more. So this one kept going a little bit, but eventually it gave it up. Right? So this is very fleeting stuff too, and it works until it doesn't. So these things might keep working, and then big money comes in and you get your head kicked in. Like a day like today, you could probably have, 50 of these trades. Look at this. Right here. Biggest buy. This is only a 5 minute. We'll look at the hour too. Bruce was using 5 minute. I think that's a little too close, but you can see these are still working. There you go. There you go. There you go. These are little moves. I mean, snapbacks, but it is snapping back. So this kind of explains too, like when you're in a trade and it's driving you crazy and it keeps doing this crap. Well, this is part of the reason. You got these algos that say, "Oh, that's too big of a move. Let's start selling it. That's too big of a move. Let's start selling it." Right? That's what causes rotations many times. There's another one. Boom, boom. Right? So the way you could do this too. Again, this is brand new. I just started watching this algo of the Market Pulse. This is just another incredible thing from the Market Pulse algo. The way you can do this is you see it. The minute you see this spike, you just get in and you play for maybe an ATR, and then you're out, right? Because this stuff is fleeting, but it does respond every time this thing pops. It's ridiculous. Here's a sell one. Vroom, vroom. It makes that noise too. Vroom, vroom. Just kidding. You can actually have it make noise. And then the other thing too, look at this on the alerts. They did this because of me. Actually, Market Pulse is because of me, by the way. Not all this stuff, but I told them you guys need an enhanced version of Tick Strike. I still use Tick Strike. I still love it. It drives me crazy when when it's against me. I get to listen to my positions going against me and watch them. But this is an enhanced version and you can see the history. Tick Strike has never shown history, and I asked them. I've been using this thing for 15 years. But anyway, I told Bookmap, you need to come up with a Tick Strike on steroids, and they did it. And now they're just taking off with other stuff, right? So, this is what I was going to show you. So on this new alert page, you can see you can even get the alerts. You can listen to them through the widget. Right? So if I turn this on, you'll hear it when it happens. You can hear it, and then you can see it. It posts just like it posts the iceberg events too. I mean the SI event, Stops and Icebergs. Guys, I just say it every day of my life. If it wasn't, I even posted on Twitter yesterday, like when I posted their deal for the yearly stuff. If it wasn't for Bookmap, I would not be trading. I say it every single week. I'd be sitting in a doctor's office right now trying to sell them some product, waiting to kiss their ass, sitting in the waiting room, getting sick by all the people in the waiting room, right? So if it was not for Bookmap, I would have never been back into trading. There is no better information. If you don't have this information, you just don't have all the information. I keep saying it. Here's another one. Price change, boom. Price change, boom. And this is what he talks about. So this is the video. I think I posted it, but I'll post it again. Hold on here. Where's it at? Oh, I want to look at the hourly too. The hourly is even more important, right? Kind of like the hourly volume pressure that we were talking about with NASDAQ earlier that I got out of some way trading. Let me post this real quick. I think I already posted it, but here it is again. So before I get into that, let's just look at some hourly ones because those are probably even more important, right? Just makes sense. If you get an hour move that's the biggest move in the last hour, kind of like that. Look at that. That's nuts. So this was a big move here and here. It did pull back, and then you got another one, and then you got a whopper. This was actually here, and you can see on those sweeps that did pop. That popped 4 points. That's a big move today. ATR's 3. That's what I mean. Like, you can get in right when you see this, and then hold it for an ATR and get the hell out of the trade. So again, if you insist on scalping, I think you can make it. But you got to be taking every one of them. If you're doing it by hand, you know you're not going to be able to watch more than 1 or 2 markets. That's the other beauty of the SI indicator. You can watch multiple markets because it's not so fast. But I mean, every one of these. Look at that. Vroom, 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 vroom. This is the last hour, remember. So you can set this up for any time period you want on these. Right? So let's any of these work, but just go in here and this is the absorption pressure. I got to ask how he does it because he was, if you watch this video, he's using the price change, which is like an outsized type move where these arrows snapping back, and then he's adding in absorption when it's huge absorption. So someone's absorbing all those orders and it's a big move, outsized move. That's even better edge. You see what I'm saying? So watch the video. I don't claim to be an expert on it yet. I will because I pick up. That's one of my gifts, right? I pick up stuff very quickly as far as edge. So you can see this. He's showing this here, right? Let's see if it plays. And you should get on these webinars with him too. I mean, he's
for 5 minutes.
all
go to
knowing
the
too.
settings in here. I have a 5-minute period in here, the look back or training period, and just understanding where within 5 minutes what's kind of an average move. And this is extended. This is over the 70% line here. These little white lines in here. Well, let's actually bump that up in here. Makes sense, right? We're looking for a really extended move. We can try 85%. When does that happen? Well, it happened up in here. Okay? So it started to happen in here.
See, so he changed his threshold there, right? So it's default at 70%. Well, you could say I'm only trading if it's 80%, 85% of the biggest move in the last hour, or 100% of the biggest move. That's even better odds, I'm sure, if you take enough of them, right? So anyway, he goes over, watch the video. It's awesome. He just made this the other day, I think. Usually says, I can't see it there, but this is the same stuff. You get these pullbacks every time the stuff fires off. Pretty amazing. Just more edge. I mean, how much edge do you guys need? It's all staring you in the face, man. I try to show you how I use it. You can come up with your own ways of using it. You watch 10 million of these things and you come up with better entries and different rules. That's fine, right? But if you're just starting out and you're trying to understand it, I would definitely learn how I'm doing it just because I've watched so many of them. And I do have probably the most volume watching experience on anyone on the planet as far as eyeballing, trades, millions and trading back in the day, millions and millions and millions. I used to average 1 million round turns in a month. 1 million round turns flipping this thing back and forth. So I've seen some order flow in my life. That's the point. I'm not saying it's not glory days. I'm not saying, I'm God Almighty because I did that. I'm saying you should want to utilize my experience. And when I'm telling you the patterns for this stuff, it's all based on how I used to react as a trader, as a large trader, how other guys would react, that I could see what they're doing, so on and so forth. So the point is, trade it how I'm trading it for now. Learn the rules and the setups in the course that I showed and everything else. Learn that, and then once you watch enough of these, you may start saying, hey, you know what? I don't need to see an ATR move out of here. I'm going to get in right away. Stuff like that, right? All right, we're at the time. You can hear that price. It gets really annoying too. Where's it at? Of course, I can't find it. That was bonds. I don't know what I did with the ES one. Anyway, if you got any more questions, I'll answer quickly. Let's see. Starting with a 20,000 account, Scott, what is it realistic on a given day? Well, when you plug it in this spreadsheet, right? So if you put in 20 grand and you're risking 2%, that's the most you should be risking on a trade, in my opinion, 2 to 3% max. A winning trade's $400, right? So, I would say that's, between 1 and 2 winning trades a day would be your goal. Not goal. Remember, you don't make $800 and say I'm done, but I would say an average of 1 to 2 trades, so maybe $600 a day. I would say would be a good baseline that you can expect to make if you're adhering to your percentage loss rules. That is probably an average day with a $20,000 account risking 2% would be my guess. $600, right around there, right? Doesn't mean you're going to make it every day, but over the year, if you have a strategy, you should be able to at least average something like that, right? If you have an edge, and I'm showing you the best edge in the history of the planet, futures trading, as far as I'm concerned. GH, would you be open to receiving 1% on about 50 to 100,000 each winning trades if we try your signals for certain commodity trades? What do you mean open to receiving 1%? You mean you giving me 1%? You can give me as much as you want. I don't know what you mean by that. Conscious Monkey, Scott, the algo link you posted here never showed up for me. Would you post the same link on Discord? What algo link? Algo guy? Are you talking about? Conscious Monkey? Yeah. Yeah, hold on one second. It's in there. If you scroll up, I'll post it again once I hop off this webinar. Because I got to find it again. I'll post it here. But it's in there. If you scroll up, everything I've posted, that all stays in Discord. It just doesn't stay in YouTube, right? Because it's a different stream every week. But if you go up on my channel, like right here, I'll just show you guys real quick. You guys should be part of this Bookmap Discord anyway. All right, I can't find the damn price change algo. That's what's making that noise. Anyway, go to Bookmap Discord. You're going to want this to get the zone drawing tool anyway. You need it because you got to get in that room and ask Andrew for access. Anyway, where's my... Yeah, remember Scott Zones, ask Andrew for access. Anyway, this is my channel here. Hold on. So that's the live stream, but then this is... You go to this channel, scroll up, I'm sure it's in here. If it's not, I'll be very surprised. I know I posted it. Maybe I didn't. All right, I'll post it again. You probably got to go back years to find it, but I thought I was in there. All right, so I'll post that. If you go down 6% of the day, time to take the day out. Absolutely. Guys, the whole point is, we've talked about this. Your trading days, most of them are going to be like this. Make a little, lose a little, make a little, lose a little, make a little. Huge day. Make a little, lose a little, make a little. Huge day. That's why you don't want to quit when you make a certain amount. You want to get a little bit of a give back, and those are the days you can crush it. What you don't want is a big day and then a big day going this way. So if you follow your risk rules, I'm not even going to start with this rank because I'm out of time. You have the big day and you stop yourself at 6%, and then your down days look like that, and then you back and forth, big day, small down day, back and forth, you know what I'm saying? If you're risking 10, 20%, you're going to look like that, and then you're eventually going to have a really, really bad day, like lose $800,000 in a day like I did twice within a month, and you crush your accounts, right? So that is one of the most important aspects of, I'm not going to get into that rant right now or that story because that story makes me very sad because I didn't follow my own risk rules at the time because I was a young punk idiot, and my trading firm didn't stop me either. I lost $1.6 million when my stop loss was $100,000. I lost $800,000 both times. That's $1.6 million more, or $1.4 million more I should have in my bank account if I just followed my risk rules. Guys, there's going to be days that it's just not making sense and you're getting your ass kicked and you go on tilt mentally and you're like, I'm going to get this back. F this. This is ridiculous. And they get in this competitive mode, and then you wake up the next morning and you're like, what the hell did I just do? I just blew out 60% of my account for what reason? That day just wasn't making sense, right? I'm not going to get into that, but it happens. It will happen. If you're not monitoring your risk, you're going to have a day where you're probably going to blow out your account. That's all I can tell you. It's a pretty much a guarantee. All right, that's my rant. This is my last rant here. I gave back this entire effing move because I didn't get out up here. I wasn't going to get out of all of them, but I didn't want to get out of half. I had 4 on. I'm still in it, but that sucks. So you got to monitor your areas you deem important to pay yourself as the market makes money available to you. That was bonds. All right, other than that, I'm still long a couple or 5 NASDAQ. It's just bounced around the zone. I'll hold that to the red lug we talked about. I think it's 175-ish. Other than that, if it comes down to 100, I'm stopped out. But I got out of some up here when this market pulse told me something was up. The buying wasn't winning right then. All right, I do this every day in my trade room. Head over if you want to learn, get the course. You know, again, you can learn this stuff on the fly on my trade room, but I'm trading live. I don't go over basics. If you want to get a jump start, get the course, learn what I'm doing, learn the setups, and then when you come in my trade room, you hit the ground running and you understand what the hell I'm talking about instead of trying to learn it on the fly, right? So that's my spiel for that one. All right, guys, have a great weekend, and happy New Year, and I will see you next Thursday.